Okay. Now, when you look at the joint venture, okay, what is the procedure? What is the procedure? The procedure is, okay, the procedure is number one. Okay, number one. There is a capital contributed, capital contribution. Okay, capital contribution. Okay, or after 2-3 months, there may be advance paid, capital contribution or advance contribution. This is issue number one, point number one we come across in joint venture. Okay, then what do we come across? We come across goods purchased for the joint venture. Goods purchased for the joint venture. Okay, right? Goods purchased for the joint venture. You contribute the capital and you purchase the goods. Then what all you see? Sometimes the contributors or the joint venturers or the co-venturers, co-venturers to the joint venture, they may be contributing their own material if they have companies. Just like previously we have discussed about, some people will contribute the steel, some people cement, okay, and they may contribute some goods, supply goods, okay, goods supplied from their own stock, right? That's another point. Goods supplied, okay, goods supplied, okay, from their stock, from their stock. Are you getting me? Yeah, goods supplied from their stock. Okay, now goods purchased, I'll make it a short form, GP, right? This as, okay, this as goods supplied out of stock, of their own stock. GSS I'll call it. Okay, next. What is next? When we see problem, what are the common things that we see in any normal case? Okay, there may be issues or points that we may get out of the, what we are talking. Now, what are the common points, common figures that we can see in a problem? These are the figures, right? Anything else? Anything else?
Expenses.
Expenses. Very good. Expenses. Expenses. Next. Number 5, expenses. The co-venturers may spend the expenses, right? Or anybody may spend the expenses, spend for the expenses. Next. Next. Yeah, if co-venturers are working for the joint venture, okay, are they not entitled for the salary? Yeah. And sometimes if they, sell the goods on behalf of the joint venture, are they not entitled for the commission? Or when they advance, money to the joint venture, are they not entitled for the interest? Yeah, salary, commission, interest is another, area we can see in a joint venture problem. Next, 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 please. Next. You can see your problem and say, you can see, your solutions and say. There will be sale also, in a joint venture. You will sell goods or services. Okay, there's a sale, right? Next. Next.
Source of the value.
Yes, Ganesh, tell me.
Nothing, sir.
Okay. Then after the joint venture, meets its purpose and it may be closed, then the leftover stock. one of the co-venturers or some of the co-venturers may take over the stock now. So what is that called?
Stock enhancer.
Stock taken over by co-venturer. Co-venturer. Okay, right? And next, share in profit, right? Share in profit. So, these are the issues that we have to deal with in joint venture. Okay, in joint venture. These are the issues we have to deal with in joint venture. Okay, right. And after this, yeah, what do you do with these things? There are 8 items, right? 8 items we generally come across in a problem, in a typical joint venture problem. 8 items only, 8 types of transactions. Okay, 8 type of transactions. So what do you do? We make joint venture account, you make joint bank account and co-ventures account. Joint bank account will just set aside. Okay? Just like in consignment, okay, consignment account, okay, is very important. In joint venture account is very important. Okay, so what do you do with these things in joint venture, right? Yeah, if we take an account, T form account, 1, 2, 3, 4. Yeah, if you take a T form account, right, and try to make, okay, account, joint venture account, joint venture account, okay, joint venture account, and you have debit, you have credit on both the sides. Then take them to extremes of left and right. Okay, then you have particulars, okay, amount, particulars, amount, okay, particulars amount, particulars amount, right? Okay, now these transactions you have to fit in this joint venture account, right? How do we fit it? Joint venture account, okay, follows, joint venture account follows nominal account rule. Okay, nominal account rule. Okay, what is the nominal account rule? What's the rule for nominal account? Yes, debit all expenses and losses and credit all incomes and gains. Okay, it's just like profit and loss account. Okay, if that is the case, if this follows nominal account rule, what are the expenses here? Goods purchase is an expense, right? Okay, purchases expenses, right? Okay, now even if co-venture supplies, then it has to be accounted, because that's, you have to account as if it is purchased from outside. It is just like purchases. Then there are expenses. Okay, then there are there is salary, commission, interest paid to the co-venturers. Okay, so these are the expenses, right? These are the expenses. Okay, I'm not sure whether I can paste it. Yeah, I could. Yeah, right. So what we do is to goods purchase. Okay, to goods supplied, okay, to expenses, okay, and to salary or commission, right? So all expenses you have debited, right? Then what is next? What is next? Incomes. Okay, incomes. Now you have sale, which is income. Okay, then you have a closing stock. You have a closing stock. Co-venturer. Okay. Yeah, you have closing stock and you have sale. What we do generally in the profit and loss account, we take on the credit side. Okay. So buy sale, and buy stock taken over by one of the co-venturers. Okay, that's it. Any confusion here? Boy, boys and girls, any confusion here?
No, sir.
Okay, then once this is over, the remaining things are very easy. Now I sent a problem in the group. Can we, we'll just take that problem and fit in this format. Yeah, fit in this format. And
Yes, sir.
if it is journal entries, yeah, if it is journal entries, what are the journal entries we can write? Right. What are the journal entries? Look at this. These transactions, these transactions, we will, what we can do until, we will classify this way. Right. If there are, I'll continue. Right. So let us, yeah, if there are two partners, okay, if there are two partners, yeah, if there are two partners and we are trying to analyze the transactions, look at this, it is like this, 1A, okay, 1A, capital brought in by A, A, okay, how does he bring? He will bring either in the form of cash or in the form of bill, okay, 1B, okay, 1B, capital brought in by, capital brought in by B. How does he bring? The same way. Okay, he brings in the form of, yeah, he brings in the form of cash or, okay, right. Next, this is one thing. And goods purchased by A. Goods purchased by A. This is 2B. 2A, sorry. 2A. 1A, 1B. 2A, okay, goods purchased by B. Okay, how does he buy? He purchases for cash. Okay, for cash. Then 2B, 2B, goods purchased, this is A now. Goods purchased by B. Goods purchased by B. Okay, the same thing, right? This is cash. Then 3A, goods supplied from stock of A. From stock of A. Okay, goods supplied from the stock of A. Okay, how does he supply the stock? Okay, it is treated as purchases, as if you're buying from outside. Okay, purchase. Then 3B. Okay, goods supplied out of stock of, yeah, it is same. Only thing is it is done by B. Okay, next 4A. Okay, 4A. Expenses paid by, expenses paid by, paid by A. Okay, expenses paid by A. Right? And how does he meet the expenses? He meets the expenses by paying cash. By paying cash, per cash account is affected. Okay, then 4B, 4B, expenses paid by B. Okay, and the account affected is cash. This is B. Right. Next, yeah, 5A, 5A. Okay, 5A, salary paid to A. Salary paid to A. Okay, salary paid to A. And yeah, again, I'll write like this: salary or commission or interest. Okay, interest paid to A. Okay, all right. Then it is salary, salary, commission, and interest to be affected. All right. Then the same thing for B also. Okay, salary, commission, interest, and yeah, for B also. Okay, right. Only thing is you will write here B. Then 6A, 6A, goods sold by A, goods sold by A. Okay, the account affected is cash. Cash. Okay, then 6B. Okay, 6B, goods sold by B. Goods sold by B. Okay, goods sold by B. Right. And account affected is cash. Next, seventh A. Stock taken over by A. Stock taken over by A. Okay, and it is the purchases which is affected, right? Okay. Then 7B, stock taken over by B. Okay. And the same thing is affected, purchases. Okay. Then 8 type of transaction. 8A, share in profit. Share in, okay, share in, I'll say share in profit, okay, of A, right? And similarly, if you take B, share in profit of B, okay, 8B is share in profit of B, right? And what is affected? The profit and loss account. And loss account. Okay, so this is analysis. Okay, so the same thing in ledger accounts in the, sorry, same thing in ledger account, uh, you will write joint venture account. Right. Next, uh, now let's look at how the joint venture account, this is a basic joint venture. If there are two joint venturers or co-venturers, how this account looks like. Okay, okay, I'll just take the same account but with the different, uh, with updated data. Look at this. Yeah, uh, joint venture account debit to goods purchased account. Okay, when you're purchasing goods now, yeah, this is goods purchased actually. How do you purchase goods? Okay, how do you purchase goods? You will buy by paying cash. So the term to be written is to cash, and you have to write goods purchased. Okay, goods purchased in bracket. Okay, goods purchased in bracket. For example, if these goods are given by, if these goods are given by uh, one of the co-venturers, let us say, I will say in the books of, in the books of, I'll say in the books of A, in the books of A. If it is in the books of A, if it is in the books of A, okay, then some of the goods are purchased for cash and some of goods are supplied by B. So in that case, what will you write? To B's account, to B's account. Okay, and what is that? Goods purchased, goods purchased in the books of A. If B is supplying, you will account for him, right? Then, yeah, and another thing, if if he's supplying goods from his own stock, from his own stock, okay, this is also treated as purchases. So purchases account, okay, but where are you getting it? You're getting from your own stock, goods supplied out of stock, goods supplied out of your own stock. Okay, so this is it's written in bracket, goods supplied out of stock or from their stock, or goods supplied out of stock, goods supplied from the stock, you can say from the stock of A. From the stock means whose stock? From of A. Then if B is doing the same, if B is doing the same, okay, you will write to B's account. Okay, okay, to B's account, B's account. B's account. If B is supplying goods out of his stock, you write to B's account. Okay, what is this? Goods supplied out of stock. If you are supplying purchases, in bracket, goods supplied out of stock. If B is supplying, then you will write GSS, B's account, in bracket, you can write GSS, goods supplied out of stock. Okay, if, yeah, if in case of expenses, you're meeting the expenses, then if you're meeting the expenses, you will write cash because you're paying cash to cash in the books of A. But if the same is met by your co-venturer, okay, then you will write to, okay, to B's account, to B's account. Okay, what will you write there? Again, expenses, 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 right? Expenses. Are you getting me? For example, there is a salary paid to A. Okay, how do you salary paid to A, right? So in case of salary, okay, it is simply to salary, right? If the same is paid to B, then to B's account, to B's account. Okay, in bracket agar chahe to you can write salary paid to B, salary paid to B. Okay, then yeah, B's account. Then profit, profit. Okay, look at this one. This is 2. Okay, this is 3. Okay, and this is 4. This is 5. Where did I get this from? Look at this. 2. Okay, 3, 4. Okay, 5. I have completed till 5. Then stock taken over. 6 and 7 are there. 8 all. 6, 7, 8 are there. We'll see how we'll deal with that. Okay. Now, stock taken over. I'm sorry, goods sold. Yeah, we completed till here, right? Okay. Yes. Goods sold. Goods sold. When goods are sold by A. Okay. When goods are sold by A, the account affected is, yeah. Look at this. It is like this. Yeah. If you're selling, you will write buy cash. Okay, buy cash. You can write in bracket sale. Okay, but if the same sale is done by B, B's account you'll write. B's account. Okay, this is also sale. This is also sale. And if you're taking stock, if you're taking stock, okay, then you will say buy purchases. Okay, buy purchases account, because the purchase account is affected. And in bracket, okay, you can write stock taken over. Okay, stock taken over. That's it. You don't need to write by co-venture because you are only co-venturer, right? But if the same stock is taken over by, B, okay, by B's account, by B's account. Okay, B's account, stock taken over. Okay, and you can write in bracket stock taken over. Taken over. Okay. So look at this. We have done 6th and 7th also, both for A and B. Lastly, leftover is share in profit. Okay, share in profit. Look at this. This is, yeah, share in profit. It is transferred to profit and loss account. To profit and loss account, whatever profit you get, to profit and loss account. Profit and loss account. Okay, profit and loss account. If the profit share is belonging to B, B's account. Okay, B's account. What do you write there? Okay, what do you write there? Share in profit. Share in profit. And what is this? This is also share in profit. Okay, that's it. So this is the detailed explanation of, yeah, detailed explanation of the joint venture account.
I'm up, sir.
Yeah. If the same is done in the books of B, I want you to do in the books of B. The same account in the books of B. Yeah, in the books of B. Yeah, just try one. In the books of B. In the books of A. Okay. In the books of B, I want you to attempt. Okay. So, right. This one, I just want you to attempt. You take a screenshot just in 1 minute or 1 second.
Sir, time's up, sir.
Yeah, and okay.